Sean Todd from Asivda. Today's question we'll be answering is going to be on risks and what risk do I have when I'm investing in my portfolio. And I believe a lot of us believe we understand about risk. I think there's a lot of risks that we don't talk about. One of the risks that I'll talk about today is going to be economic risk. We're experiencing some of that because of COVID. We see it in the papers, we see it in the media, and of course we certainly can see how the economy can shift because of what's happening with this pandemic, and of course other impacts on the economy from other factors at different times. We also have government risk. We invest in governments, and that can be good or bad. So often we invest inside bonds and fixed income that's held by governments, pays us money back for holding that money. And of course, in the past, it's been good, and times have been good for those investors. But of course, I would believe and express to you that depending on what government you're investing in, that can have different causes and effects. Other risks that we should be aware of is business risks. So if you're investing solely in only one company and one company's performance, that can have a risk on your portfolio. Of course, being underexposed or under-diversified can have a complete impact on, do you have enough exposure to one company or too much exposure to one company? And the last one I'll talk about before I finish up today is going to be the inflationary risks. So either we're going to have hyperinflation or we're going to have deflation. Sometimes items become much more expensive in the future than they are now, or deflation is going to be opposite of inflation, of course. We're actually going to have difficulty selling items, and that causes a lot of different reactions inside of our portfolio. So we often hold different exposures inside the portfolio to counter effect all those different risks. Sometimes we diversify to get away from business risk. Sometimes we hold items inside the portfolio that will go up in cost to offset any type of inflationary measures or any inflationary pulls that we see in the portfolio. So that's some of the questions that we often cover when we talk about risks. So some of the things that you can do inside your own portfolio to mitigate some of these risks, having a plan, I believe is very, very important. If you have an investment plan with a long-term time horizon, then of course you're going to invest wisely and pick items inside your portfolio that will match your plan. I think it's important to diversify somewhat in your portfolio based on your goals and your time horizon and your objectives. I think that's incredibly important, and to better understand the holdings inside your portfolio to ensure you're protected against each of the risks you spoke of today.